Hey everybody, it's Greg Harrelson here with Century 21, the Harrelson Group, and of course I'm joined by my partners, Abe Safa, also with Century 21, the Harrelson Group, and today is the day. We just want to come to you with some updated information on what's going on in the Myrtle Beach real estate market. Abe, welcome. Good morning.
Good morning, Greg.
So there's the market remains to be very active. It seems like we had a little bit of an uptick in sales. I know that we're putting more properties under contract right now. So that's a good thing. Did you notice that yourself?
Yeah, I did. It seemed like every little bit of a downturn in the mortgage rates creates a little bit of an upturn in sales. So that's
Yes.
a really good sign because that tells me that the buyers are still out there. They're still
Yes.
looking and ready to pounce on properties when they come out.
Yeah, yeah. So we'll see what's going to happen with prices because, logic would tell us that if interest rates go down, then buyer demand goes up. Inventory was already really low, so that could actually put pressure on prices to kind of go up a little bit. But of course, we've got this major issue with prices going up, and that's called the affordability gap. How much more can people really afford? So it's some interesting times, but maybe we'll touch on that in a little while. Let's talk about the numbers, and then we'll kind of go from there.
Okay, yeah, that sounds good. So looking at the numbers, obviously the concern was the number of closed sales. The last couple of months have been down significantly over last year. So October, November, December last year were extremely strong. It was a very strong fourth quarter. So when we looked at the pendings, on the last show, we talked about what the pendings were for November. Home pendings were down 42% and condo pendings were down 46%. So that leads us to kind of come to the conclusion that December sales are going to be down somewhere in that ballpark. So I pulled up last year's closed sales for homes and for condos. And then, last year there was 662 condos sold. So if we go down 46%, which is what the pendings were for November, that's going to put us somewhere in the range of 350 closed sales on the condo side. So that's a significant drop. And then on the homes, it was 684 last year, and a 42% drop will put us somewhere below 400 closed homes for the month. So that's really the biggest concern right now is, you touched on it early on, the affordability gap right now is so high. And it's really keeping some of the buyers, on the sidelines right now. So projected to have closed sales being down for the month of December is what we're looking at.
Yeah. I think there's a lot of, there can be a lot of confusion in the real estate market now also. And that is like I know these numbers are factual. In other words, the pendings are down 42% for homes, 46% for condos. I mean, that is significant. And that is also factual. The key is typically when we see that kind of decrease in sales, then we see prices going down at a significant pace also. But prices are not necessarily going down at that significant of a pace. Like let's just say sales, instead of 100 sales, there was 60 sales, right? That's massive decrease. But we don't see that correlates to an equal decrease in pricing. Can you speak on that? I know that I believe you would agree with that, but can you speak on that a little bit?
Yeah, I mean, that's a great point. So I've always believed that pricing is a function of supply and demand, right? So when typically sales are down this much, number of closed sales down this much, you would see inventory just accumulate. So as inventory starts to accumulate and we have a huge amount of homes and condos on the market, that should drive prices down. The challenge with this market is we're not seeing inventory accumulate. I mean, yes, it's gone up significantly from last year, but last year was just like an insanely low level of inventory.
Yes.
So right now we're sitting at about a 2.4 month supply of homes on the market, which is still pretty low inventory relative to historic numbers. So I think that's part of the problem. So, and the reason for that is the number of new listings in the market is also down. So sellers are not flooding the market. And then the sellers that are on the market right now, I'm seeing a lot of them, just kind of being patient. Like I see a lot of them withdrawing their properties at a much faster pace than normal, meaning that they'll put it out there for sale at a particular price. And if they're not seeing any bites on it in 30, 45 days, they're pulling it off the market.
Yeah.
So it's keeping that level of inventory relatively low, which what the reason that we're not seeing prices really plummet relative to what the pendings and closed sales are doing.
Yeah. Now, I would imagine, and I'm not an economist, and I'm almost going to start speaking outside of my realm of expertise here, but I understand that a lot of this interest rate hikes, at least my understanding, my interpretation of what the Feds have been doing, is to slow this economy down to prevent inflation or increased inflation. The challenge is that a real estate transaction there's over 30 people that get paid off of a real estate transaction. Like, for instance, the 2 real estate agents, a mortgage person, the processor at the mortgage company, the home inspector, the insurance agent. It just handyman. It just goes on and on and on. And I'm imagining that at some point, this decrease in number of sales there's going to be a conversation in the next year about the overall economic impact on lost work because of these transactions going down. That's not even being discussed, but it'll be interesting to see what is going to be the Fed or the government's reaction to that, because there's a lot of tax money that's being lost because these transactions are not cycling through. So there's really not anything that I think that either one of us really know about that. Maybe you do. But it'll be interesting to see kind of how what happens, because in order to fix that problem, they may have to lower rates, or lower rates, then that might hurt affordability gap, which would actually which would decrease demand. I just find ourselves in a pickle. I find ourselves in this little pickle right now.
Yeah, it's going to be a challenging next 6 to 18 months. We don't know how long it's going to be. The good news is, for the real estate market at least, is that the Federal Reserve Chairman is starting to soften up on his rhetoric and his narrative. So I know I think Wednesday he's supposed to come out and possibly do a 50 basis point increase in the rates. We'll see. Last time he spoke, it kind of looked like he was softening up a little bit. So that's the number that we're looking at Wednesday. Today, CPI numbers come out. So what he's looking at the CPI numbers, which is the inflation numbers. He's also looking at unemployment numbers. And I based on hearing him speak, it kind of sounds like that he thinks that he may have done enough. Okay, yes. But there's going to be a lag, right? So it doesn't just happen overnight. So he thinks he may have done enough, at least to the point right now where he's starting to soften his stance a little bit. So that kind of tells me, hopefully, all right, we'll find out Wednesday, that the worst as far as the tightening of the economy is past. Now we just have to see what the effects of it are over the next 6 to 12 months, and then that'll determine what he does moving forward, depending on whether it's a soft landing or whether it's a crash of the economy. We'll see how that goes.
Yeah. And in the Myrtle Beach market, and I think throughout South Carolina, I think that we're anticipating, at least I am anticipating, that we're going to probably see like a kind of a lull for a little while, or I should say, we might see ourselves kind of just leveled off at this number, at this level for a while. I'll be surprised, like, if in 2 months we see dramatic shifts in any direction, or even in 5 months, dramatic shifts in any direction. Whether we see the same amount of sales, which is lower than what we're used to for the last couple of years, or slightly lower, none of those will surprise me. But movement dramatically in one direction or another is probably not going to be likely. But again, we keep our eyes on it every day, but that's kind of what I'm anticipating.
Yeah, I think a lot of it has to do with what we're comping against, right? So when we comping right now, October, November, December to last year, those are very strong numbers last year. So we're going to be down significantly as we get into January, February. Yeah, those numbers were still very strong. Once we start getting into March, that's when what they call the real estate recession kind of started. Once we start getting into those numbers, then we're not going to see these drastic decreases over last year at that point. So it really comes down to what we're comping against. The good news is the Fannie Mae home purchase sentiment index came out, and it was actually up for the first time in 9 months. It wasn't up a lot, right? But it's a sign that consumers are starting to get a little bit more optimistic about buying a home. It's still really low, right? Because I think October was the lowest month in history. It was the lowest level in history. But at least it looks like we may have bottomed out as far as consumer sentiment, as far as buying a home.
I just thought about that. I just thought of something as you were talking. So we could see the first quarter of 2023 is probably going to look really, really bad when we do year over year results, because the first quarter of 2022 we were still hot. It wasn't until the second quarter where the interest rates spiked and then we started going down. So we're gonna have, likely because of the pendings that we see, the decreased pendings, that's going to mean first quarter sales are going to be significantly lower, and it's going to be compared to first quarter 2022 when they were significantly higher. That quarter over quarter may be one of the most dramatic numbers that we've reported in a long time.
Yeah, I went back and looked at January of 2022. We closed 573 condos and 479 homes. There's no way we're going to close that many this January. And when you say a drastic drop, we're not, again, we want to be very clear. We're not talking prices, right? We're talking about number of sales, number of homes that actually sell and close. That's what we're talking about. So we're seeing a significant drop in those. And yes, 100%. Like I'd be shocked if that number wasn't down drastically in January as well. Because
I'm
again,
going to give another disclosure.
Numbers.
Yeah, I'm sorry about that. I'm going to give one more disclosure because you gave a great disclosure there, and that is when I say drop, the reason I'm saying massive drop, it won't be like massive drop compared to last month. It'll just be a massive contrast between 12 months ago, same time period. So that's what I mean by that. So that doesn't change what Abe and I are telling you on a weekly basis, but just be prepared. We're probably going to see some news out there that will be using these numbers, because these numbers are going to be drastic, and it'll be, kind of negative news sells. So it'll be clickbait but I don't think that's not new news. It's not like, hey, this is where we are today, and then tomorrow we have a dramatic drop. That would be totally different. We're talking about 12-month-old news. It's just that it takes 12 months before we can report these numbers based on year-to-year data.
Yeah, I was reading another thing of good news for us, at least in South Carolina. I was reading something yesterday. I can't remember where it was from, what the source was, but it was a very credible source. It might have been Freddie Mac. It might have been NAR. I can't remember. Talking about different markets and how the markets that are likely to see the biggest drops in prices are up in the Northeast. A lot of the New York area are going to see big drops. Austin, Texas is all of a sudden went from one of the hottest markets in the country to the cool. It's gotten really cool. But the South is still looking strong. So they're anticipating the South having, the smallest amount of decrease in price. If there is a decrease in price, no one can predict that, but it's going to be softer for us than it will be for the rest of the country.
Cool. All right. Well, I think that's a great update for today. Again, everybody, if we can do anything for you, my name is Greg Harrelson, Century 21, the Harrelson Group, and Abe Safa with Century 21, the Harrelson Group. You can see our contact information here, and at the bottom. If you have any questions, you can call us, text us. Whether you're selling, buying, or just curious, reach out to us. We'd love to earn the right to do business with you and be your real estate resource. Abe, thank you so much.
Thank you, Greg. And next week we're not going to be on, so we wish you all a happy holiday season, Merry Christmas, whatever it is you celebrate. Have a happy holiday season, and we'll see you right after the New Year.
All right, bye everybody.
Bye, Greg. See ya.